If you live in the Milwaukee metro area, whether if you're currently renting or if you own your home here, you probably want to stay updated on what's going on in the real estate market. And this is what my monthly market update is all about. If you're not familiar with me, my name is Marcus Auerbach. I'm a local real estate agent with the team here with Keller Williams. And we're talking here about numbers, but I think more importantly about trends and why is currently happening what we're seeing in the numbers in Milwaukee. What are the root causes? So this is what my channel is all about. And today I want to talk about inventory because you probably have already seen it in the news or will see it, that inventory is taking a sharp turn up. What does that mean? What's going on? There's going to be a lot of content on the internet that is calling for a housing market crash, for a wave of inventory. So if you're sensing a but here, you are correct, and that's what I want to talk about today and give you the real background story and the data behind it. Before we go there, let's take a quick look on the latest numbers, as always, straight out of the MLS. So inventory is up indeed, almost 50%, 3,100 units, but still not that much if you compare it to before COVID or even back in 2015, we used to have 13,000 units. So comparatively, still relatively low. Closed units are not that much. We're a third less than what we would expect typically in a spring market, about 3,000 units. We're barely over 2,000, so it's a very tight market. Not a whole lot of transactions, but the velocity is very high. We are remaining at 5 days on market, just as last month, so that is a very high velocity for a market. It's almost impossible physically to move any faster. And with that, competition is high and that is driving up prices. So 345,000 is the latest median price. That's up 9.5% compared to the same month of last year. And if you've seen my monthly market update last month, where we had a relatively weak number, and I was saying that maybe it's too early to judge this. I think there is this is just a data point, not really a change in trend. This is kind of what I was predicting there, and we've seen it in the chart there. So not really a huge surprise here. Interest rates have slightly improved. The 10-year Treasury bill has come down a little bit, which has lowered the pressure on mortgage rates, and we have seen a little better rates. We're consistently below 7% now. I think 6.6 was the lowest I've seen in the last few days for a 30-year fixed. But overall, we're remaining in that 6.5 to 7% range that will be there probably for a while until the Fed is taking steps on lowering the funds rate, and they're waiting for inflation to cool off. We've spoken a lot about this in past month. Market remains very competitive. I still talk to new clients and they're telling me, well, is the market still competitive? Yes, it absolutely is. So a lot of listings, and it depends a little bit on the municipality where you're looking in the Milwaukee metro area, but in the more interesting areas, we're consistently seeing 3 to 5 offers on a good listing. If the price is right and condition is right, it will sell on the first weekend. We had 3 listings go live last weekend, and we had all 3 under contract with multiple offers, significantly over list price by the end of Sunday. And if you want to see how much people are actually paying over or under list price, because not everything is selling for over list price. There's a good portion of the market that is negotiable, and people are negotiating good discounts. Go back to my April market update, because I'm showing you there the data. I think it was about 600 listings that we analyzed to see exactly which ones were how much over list price and under list price. And that is really interesting information. So yeah, we're still seeing multiple offers. The most competitive market remains the entry-level single-family market. We'll talk a lot. We'll talk more about why this is happening, where the demand is coming from, and what's causing this. And also duplexes are a very hot market, because a lot of people will buy a duplex, rent out one unit, and combat the higher mortgage rates this way by just having a rental income to offset their or help offset their mortgage payment. The luxury segment is often negotiable. We had a couple of really cool success stories here in the last weeks. Luxury segment is generally $750,000 and up and over $1 million, and that market behaves very differently. Some properties will go competitively, others will sit on the market, and then there is quite a bit of room to negotiate. So important to know which one is which. But let's get back to the topic of inventory, because it is super important. Here is the spike in inventory that you see it jumping up from April to May here. So this is the latest increase here, but as you can see, we are not even surpassing at the moment the high that we had here in October of last year. So it's a lot more inventory than we had, but we are far away from having too much inventory on the market. So the demand is still higher than the supply. And because that is the case, we are still seeing a lot of aggressive offers. And a metric that I like to follow is the sale to list price ratio. So this is simply telling you on average how much people are paying for properties after negotiations, after the deal closes, in relation to the list price. So what we're currently seeing is 102.3%. So on average, people paying 2.3% more over list price. That means on competitive houses, they are usually between 5 and 10% over asking price. We have dipped down in December and in January. We were below 100%. So that was an opportunity, but this is very normal, a seasonal trend. We see this every year during the winter, and then it's back up there where we expected. The market, and you can see this on the left side of the chart, used to be hotter last year. So I'm not sure if we are going to get back to 103%. At the moment, we seem to be comfortable in that 102 range. But that is still, we're still in very, very competitive territory. And with that, of course, we are seeing continued upward pressure on prices. The blue line here in the chart is giving you the median list price. So you can see that sellers and their agents were not as bold in January, February, and March. There were a lot of concerns about the economy, about interest rates, about how this year is going to be. But these concerns have been alleviated, and now the sellers are leading the market. You can see how they're consistently pushing up from where we used to be, just over 320, and now we're here in the $370,000 range where sellers are. So let's take a look where deals end up after they have been negotiated and are closing. That is the green line here, and this is how people are actually closing on properties. So this is the 9.52% increase that you have just seen. So we are approaching $350,000, still quite a bit less than the national average in the US, but Milwaukee real estate prices are starting to creep up and closing the gap to that average. Now let's take a look at what the long-term picture is here with inventory. A lot of people are always worried that the market is going to change overnight. Real estate markets move very slowly. They change over years, not over months, over weeks. I think people are confusing, how quickly the stock market can change with how the real estate market is moving. So you see here very slow moving trends. This chart here gives you months of supply. So we're basically measuring with the current inventory on for sale houses that's on the market, how many months will it take to have all of that sold? Because that metric is interesting because it incorporates both supply and demand, because inventory by itself is kind of meaningless if you don't know how much demand there is. So if you look at month worth of supply, then you have both sides incorporated. That's why it's interesting. And back in 2015, you can see here we were at 6, 7, 8 months of supply. The high points here are always in late winter. That's when we have most inventory, and then drops down in spring, summer. And we are consistently remaining here in a very, very low range with inventory. So before we can see the pressure, the upward pressure on home prices softening a little bit, we need to see this metric changing. We need to see more inventory on the market. And that's currently not in the cards. And we're going to talk in a second on why that is. Where is the demand actually coming from? Are a lot of people moving into Milwaukee, or what's happening? And also, where is the supply coming from? What can we expect in the future? But before I get there, let me just quickly take a side note here. If you have questions about selling and buying, this is one of the most common conversations that I have at the moment with new clients. They're like, yeah, we want to sell our home. We have a ton of equity that I've made in the last years, and we want to use that equity and buy a home that is a better fit for our family, for whatever reason that is. There are a lot of logistics involved and a lot of moving pieces. So that is always a conversation where I can help you strategize. A lot of people, quite frankly, make the mistake. They bring me in way too late when they're ready. And that means for me, I cannot help them strategize. So do yourself a favor, reach out early to me, send me an email. A lot of people seem to prefer that. They just send me an email, say, here, this is what we're up to. And what are your thoughts on this? And then I can give you my comments on that, and we can go from there. And if you want to look me up, then go online, check out our Google reviews, check out my reviews on Zillow or Realtor. We are quite proud that we have 5.0 reviews. Thank you very much to our existing or past clients for posting those reviews there. We really appreciate it. And for you, I'd rather have you hear it from them than from me. With that, let's get back to what's happening with the inventory side. Where is all the demand coming from the housing market? And you've probably heard this before, but I want to remind you on this. So what we're seeing here is a demographic shift. And you have your chart that shows the US population in millions of people and how big those segments are. It's a really nice visualization. And we have here the millennials and also Gen Z and Gen X. So this segment is who is currently buying houses. They are the number one home buyers. There's, of course, other age groups as well that are buying occasionally, but this is the majority of the home buyers. And the majority of the home sellers are here in the older generation. So that would be the boomers and the silent generation. And on this chart, you can visually see so well how much smaller this demographic is compared to this one here. So this is why the supply and demand is completely out of whack, because we don't have enough home sellers in the market. And on top of that, the older generations prefer to remodel their house, stay in their house, and not move into assisted living, etc. If they don't have to. They also live longer and live healthier, and that is really cutting into that generational supply. But this is the biggest generation that we've ever had in the US, and a lot of them are in their prime home buying years now. So let me give you a sense for what this looks like for the Milwaukee metro area. So we have a population here of about 1.6 million people if you look at the entire metro area, right? And this is how it breaks down into generations. So you get your Gen Z with about 325,000. You got the millennials, 350,000. Gen X, my generation, about 320,000. And keep these numbers in mind, because we have a housing market that is here in the Milwaukee metro area, roughly about, give or take, 15,000 houses a year, single family homes. So when we look at where the demographic shift is happening, we have household formation mostly in this segment. So Gen Z are now getting old enough that they're actually buying houses. The millennials are in their late 30s, early 40s. They've been famously late having kids, getting married, but they're done renting. They want to buy a house now. So we have about 350,000 there, and we have some Gen X as well that are buying houses. On top of that, we also have boomers that are downsizing, and they're competing for the same houses. Typically, they're selling their trophy house, and then they're going into under $500,000 maybe range without stairs. Single family home. So the boomers are competing with millennials and Gen Z, and that's really tough competition in that price segment, just from the fact that boomers oftentimes will make a cash offer without inspection contingency because they're very comfortable. They have owned multiple homes, and that is tough news for first-time home buyers because they really want to have an inspection and they want to finance their first home purchase. So that's a little bit the conflict that we're going on. And if you look here, I mean, not all 350,000 millennials here in Milwaukee are going to buy a house in the same year. But even if you spread that out over 10 years, that would be 35,000 a year. That still doesn't make sense with the numbers that we have here. So that is really the reason why supply and demand is so out of whack. It is not that we have a bunch of people moving to Milwaukee. That's happening too. We have a slight increase in net migration, so more people are moving here to Milwaukee, but the main reason is really household formation. So people that have been staying at home or have been renting so far, they are really ready to buy their first home. And typically, once they have made up their mind and said they want to buy a house, they may take a year, they may delay it by a year, but sooner or later they want to buy a house. They're not going to change their their plans after they have made that call. And the problem is, from a construction point of view, we just haven't supplied enough new construction, enough inventory in the last years. And here is what that looks like. The reason why we do not have more houses than we have is because new construction is very low. After the crash of 2008, you can see this here very clearly, we stopped building houses like we used to. We had an oversupply. There was too much new construction here in the years leading up to 2007. And you can see it started here, and it went way above the usual average. And then, of course, the whole thing crashed, and builders went out of business, went broke, stopped building. And we have consistently undersupplied the market for 14 years. And you can tell that when you drive around and you look how much new construction there is. There's barely anything in the Milwaukee County area. You have to go out in the surrounding counties. And then you have a total of 150, 200 new construction projects. That's about it. And that is really only a drop in the bucket in our market. The other thing is that interest rates are also not helping, because a lot of sellers feel handcuffed to their house because of their mortgage rate. They have maybe a 2.75 or a 3% rate on their current mortgage. If they would sell their house and put it on the market, they would have to buy the new house with a 6.5-7% mortgage. And of course, that is a huge incentive for them to stay in the house. And I think this is what we're seeing now, that last year people were just holding out, waiting for lower rates. Rates are not coming down. We've waited long enough, so let's finally do it. And that's the reason why we see more inventory, a little bit more inventory coming on the market now. The projection for mortgage rates are not that great. Half a year ago, the expectation was that rates would come down faster. But since inflation is stubbornly sticking around 3.5%, the Fed doesn't want to make any premature moves. And out of fear that we're going to go back into high inflation territory. So they're still holding on to the tight monetary policy. And that means we will have to wait longer before we see lower rates. So I have here the outlook from the Mortgage Banker Association, and you can see the 5.9 here. So the first time we're below the psychological 6% mark is going to be, or is expected to be now, Q4 of next year, so a year and a half out. So of course that is really holding back a lot of sellers. What is doing inventory on a national level? These are the increases in every state. This is a lagging number, so I think the data is from April. Yeah. And the increase in April was 30%. So once we have the May data here, it will probably show a national increase of inventory that is higher than what you can see here. But the interesting part here is you can see a geographic trend. And the biggest increase in inventory is here in the southern states. And I think there is a relatively easy, reasonable explanation for that. Those are the states that have seen a lot of migration during the COVID years, and builders went absolutely nuts down there. They're building subdivisions, not like we do here with 15 houses or 75 houses. Down there, they're building 500 houses or 2,000 houses in a subdivision. So there was a huge influx of construction supply that we are not seeing here. Our builders are just way conservative. So if you're a builder and you're hearing this, go get rolling. We have the demand, that is for sure. Let's wrap it up here. So what are the expectations for the next few weeks here? Mortgage rates will probably stay in the 6.5 to 7% range. I have very little hopes that we're going to see a meaningful change. If the Fed is going to cut the fund rate, then it may only be 1/8% or 1/4%. So I do not expect a big change here. Maybe in fall, we will see. But then it's election, so they don't want to do anything there. We have more inventory currently, but we also have more buyers. So that keeps supply and demand really in check. We have at least 5 buyers for every property that is hitting the market. So multiple offers are remaining the norm. Especially if you're in that below $500,000 price segment. Be prepared to compete. You have a good agent that can actually help you and tell you what is the fair market value on this property, what will it likely sell for, and so you can strategize about making an offer. And hint, reach out to us. Not all listings are selling over asking, and sellers have to prepare their house and price it correctly. Some sellers are just getting overconfident with what the market is doing, and they think they can just really jack up the price and go very, very high, and then it's not working out the way they're hoping, and then eventually they have to reduce the price. And if you're thinking about buying and selling at the same time during the summer, there are a number of logistical and financial challenges that you have to master there. It is always difficult to give general advice how to do this because I don't know your specific situation, but there are several good ways of how to strategize this, how to structure it both financially and logistically, that you can more or less parallel path both buying and selling. The time to do it is now, because you need to have a reasonably good market on both ends. So it needs to be conducive to selling and it needs to be conducive to buying, so we can wrap up the whole thing in a relative short amount of time. The other question that I'm answering quite a bit is, what improvement projects should we take on before putting a house on the market? More often than not, I have to talk sellers out of spending money. Generally speaking, painting, cleaning, decluttering are going much further than any remodeling projects. There's only very few things that will actually have a positive return on investment. And then you do all the work, spend all the time, do all that extra effort and money, and then you're not getting your money back on the tail end. So that's not a good thing. But on the other hand, sometimes I go see listings and I'm like, yep, there's a few things we need to fix here before we bring it on the market, because otherwise we cannot realize the full value. So in order for that, I have to see your house, I have to see your situation. If you want me to do that, feel free to reach out. You have my email address below here, m.auerbach@kw.com. I would love to hear from you. And with that, thank you very much for watching, and I'll see you at the next one.